Welcome to Gambling with an Edge. And now, here are Bob and Richard.
Good afternoon. Welcome to Gambling with an Edge. I'm Bob Dancer.
And I'm Richard Munchkin.
Our guest today is tax advisor Russell Fox, who is making his third visit to our show. We'll be talking to Russ in a few minutes. About a month ago, Robert Griffin died at age 88. Griffin dedicated his life to stopping players who could gain an edge over the casinos, including a lot of listeners to this show. His Griffin Investigations Agency, which went bankrupt more than 10 years ago, at least partly due to player wins assisted by Bob Nersessian, was a pain in the ass to a lot of blackjack players. Being listed in the Griffin book was definitely negative EV. Richard?
Yeah, he was the bane of our existence, although I would say that it's even worse today just because of technology. Back then, the casinos didn't have the ability to take your picture from the eye in the sky, so if you got thrown out on day shift, you could go right back in on swing shift. And the only way they got your picture was to actually drag you into the back room and put you up against a wall and photograph you. And then, Griffin's business model was to sell those pictures to the casinos. They were not the brightest bulbs in the sign. They always would park their cars in the same space. So, for example, we would hire somebody to sit outside the casino knowing where they parked because they literally had to come to the casino and see you personally to be able to say, yeah, that's a card counter. So we would hire a spotter who would watch for the Griffin car, and we knew all their license plates, and the person would come in and give us the signal to get out. And there was more than one story of people who would call the Griffin agency and say, hey, we got this guy down here at the Tropicana, and we, think he's up to something. And then they would go play downtown, knowing that the one guy on duty was all the way at the other end of the strip. So, anyway, it was kind of a comical time, but he certainly did. It was actually the worst in foreign casinos because the Griffin investigations would sell the book to foreign casinos, and in many foreign casinos, you have to use a passport. So it was very easy for them to look up your name in the book and see if you were in there. And I had friends who were thrown in jail because of that book in foreign countries where, the entry said that the person played with a computer long after computers became legal. I mean, they played with a computer when it was legal, but 10 years later, that was now something illegal. So, you go to the Bahamas, it says you play with a computer, and they just throw you in jail or whatever and steal your money. Anyway, so I can't say I'm sorry to see him go.
Let's talk to our guest, Russell. Russell Fox has been a financial and tax advisor for 25 years. One of his specialties is handling taxes for gamblers. Russell Fox, welcome back to Gambling with an Edge.
I'm glad to be back.
In case any of you missed it, there was an election last week. Russell, using your best crystal ball, tax-wise, what changes do you see from President Trump in the next 4 years?
Well, first, it's almost a certainty that Obamacare will be going out in some manner. Whether it's completely repealed, the House Republicans have voted, I think it was 40 times during President Obama's terms in office to repeal it. It's always been vetoed. But it is going to go away. This has indirect tax impacts because there are two Obamacare taxes on income tax returns. The net investment tax, which is a 3.8% surtax on investment income, and the additional Medicare tax, which impacts practically everyone if you make enough money, and it's from earned income. Now, it's possible taxes will stay, but I doubt it.
Do you think that could change as early as 2017?
Yes. President-elect Trump has stated numerous times that one of his first goals in office is to repeal and replace Obamacare. I am going to take him at his word, given that the Republicans have passed it 40 times. I think the 41st time is upcoming. Also, Obamacare was passed into law using a process called reconciliation. It did not require a 60-vote margin in the U.S. Senate. Because of filibusters, a lot of legislation requires that. If it was passed through reconciliation, I would assume it can be repealed through reconciliation, meaning that given that the Senate will have at least 51, probably 52 Republicans, Obamacare's days are numbered. Now, I want to point out this does not impact 2016 tax returns being prepared next year. This would be 2017 tax returns prepared in 2018. There are a number of other things that are very likely. First, President-elect Trump has said he wants tax reform. Republicans want tax reform. So I suspect some sort of tax reform is going to happen. Tax rates aren't going to be going up under a President Trump. So that's a certainty. But how they'll come down and how much, my crystal ball does not have an answer. We're more likely to see business tax reform than personal tax reform. This will probably mean a decrease in corporate tax rates, that's C corporations, and perhaps a time allowance for repatriation of cash that's currently outside the United States. That was a proposal that President-elect Trump made, and it's widely supported by businesses. I expect a push for ending or drastically decreasing estate tax rates. Currently, estate tax limitation is over $5.5 million, so this doesn't really impact probably a lot of your listeners, but it will impact some. However, I expect Democrats to resist this. I do think that this is by far the best opportunity we've had for personal or individual tax reform since the Tax Reform Act of 1986. It has been 30 years. Typically, every 25 to 30 years, we have a tax reform bill. I think we will be talking next year about the Tax Reform Act of 2017. At least one Republican proposal would eliminate many to all itemized deductions. This is a problem for amateur gamblers. Itemized deductions are how you report gambling losses. If they're eliminated, and let's say you have $100,000 of wins and $100,000 of losses, you would pay tax on $100,000 of wins.
Now, this is only if you're not a professional, if you're not on a schedule.
This is for amateur gamblers. This, by the way, is the law in many states right now. For example, if you're an amateur gambler in, say, Connecticut, which has Foxwoods, I think, is still the world's largest casino. Not positive. I think something in Macau may have passed it, but it's certainly one of. And you gamble there, you cannot deduct gambling losses if you're an amateur gambler there. Yeah. That is the law. So, on the state return. Now, that would obviously have a severe negative impact on gambling. However, I really doubt it's going to go into law as that. There's also a proposal to allow netting of gambling wins and losses. President-elect Trump might have owned a casino or two in his time, and I think that the senators from Nevada and various other states and congressmen and women from Nevada would probably be against the proposal to eliminate gambling losses. So, the devil's in the details. We don't know the details. My crystal ball is only so good, and tax reform, probably. Schedule A, losing itemized deductions, possibly, but if so, I expect some sort of other method to be out there for gambling.
Some of us might have to find a new career.
Well, no, if you file as a professional,
yeah, this doesn't.
But yeah, most of our listeners do not file as a professional, so yeah, that would be a horrible thing. But let's not worry about that yet. It's a long way from there.
All right. Some gamblers really hate keeping good records of their wins and losses. There was a case recently involving some proposition poker players who failed to keep good records. What happened?
Well, a husband and wife were proposition players at one of the Southern California card rooms. And one of the two received a Form 1099 miscellaneous for hitting a jackpot at another Southern California card room. They put that income on their tax return. The card room that they worked at, they received, both the husband and the wife, W-2Gs for jackpots. They did not put those on their tax return because they had gambling losses, they said, that exceeded the win. So why put them on the tax return? The IRS undoubtedly noticed the omission and sent, most likely, a CP 2000 notice saying, "We think you owe some tax here." They disputed it, and it went all the way to tax court. The couple's argument regarding keeping records was, and I'm quoting the tax court, petitioners assert that initially they tried to keep track of their poker winnings and losses by writing down the amount won or lost at the end of each day. But after a while, they gave up that practice because it is bad for your psyche. You need to be strong mentally when playing cards.
That's a good reason.
The tax court stated, quote, regardless of whether petitioners were employees or independent contractors, they were engaged in a gambling activity and are required to substantiate their reported gambling losses. Accordingly, we look first at the issue of whether petitioners substantiated their reported gambling losses. Deductions and credits are a matter of legislative grace, and taxpayers must prove entitlement to the deductions and credits claimed. Taxpayers are required to identify each deduction, show that they have met all requirements, and keep books or records to substantiate items underlying all claimed deductions. To establish entitlement to a deduction for gambling losses, the taxpayer must prove the losses sustained during the taxable year. The Commissioner has suggested gamblers regularly maintain a diary supplemented by verifiable documentation of gambling winnings and losses. A taxpayer's contention that it was too difficult for him to maintain contemporaneous records of his gambling activities is without merit. And, the bad for your psyche defense does not work.
Well, I do know from personal experience, it's more fun to write down numbers with a plus sign in front than a minus sign in front.
Well, just don't put the sign. Just use red or red and blue or whatever. And then you won't have to put the minus sign.
The one comment I'll make is, if you document things, your life is so much easier in tax. If you have documentation of your deductions and you ever get audited, an audit will be an annoyance. If you don't have that documentation, it will become a very painful annoyance.
World Series of Poker. It ended a few weeks ago. Each of the November 9 pay taxes at a different rate, depending on where they live. Please take us through the estimates of the tax bite faced by each of these winners, each of whom won at least $1 million before taxes.
Okay, I'm going to start at the bottom and work up.
Okay.
So in ninth place was Fernando Pons. And by the way, if I mispronounce some of these names, especially when we get to the person who finished in fifth place, who's from the Czech Republic, I apologize in advance. Spain, first of all, and the U.S. have a tax treaty, so he did not have to have any tax withheld on his winnings. However, Spain taxes at a marginal rate up to about 45%, and you reach that at a fairly low income.
And gambling winnings are taxable in Spain.
Gambling winnings are taxable in Spain, so he owed roughly $550,000, or about 45% of his winnings. Excuse me, he owes $450,000. $550,000 is his after tax.
Mm-hmm.
Okay. Jerry Wong lives in South Florida. He won $1.1 million. He does not have to face any state income tax. Florida does not have a state income tax. He's going to lose he's a professional poker player, so he owes self-employment tax and federal income tax. He's going to lose a little over 38%, or about $419,776 to those taxes. Seventh place was Griffin Banger, who lives in Canada. Now, the tax situation for gambling in Canada is in flux. The reason it's in flux is the Canada Revenue Agency, the equivalent of the IRS in Canada, would like to tax gambling.
Go figure.
I'm shocked. I'm shocked.
But currently there isn't tax for gambling wins.
It is, the courts have ruled otherwise, except in Quebec. The Quebec portion of the Canada Revenue Agency, which I think may be a separate agency, does go after gamblers in Quebec, is what I have been told. So, obviously if you're a gambler, Toronto sounds much better than Montreal right now. But currently, and there is apparently more litigation going on there, gamblers in Canada do not owe tax to Canada. However, anyone who gambles in the U.S. who is from Canada has 30% of their winnings withheld. Mr. Banger won $1.25 million, So he is going to lose 30% of that, or about $375,000 to withholding.
Yeah, to withholding, but he can get that back, right?
He can get back up to the amount of his U.S. gambling losses. He cannot get that back unless he has gambling losses. So if that was the only poker tournament in the U.S. he played, he cannot get any of it back.
Okay.
Now, if he were subject to Canadian income tax, almost every country in the world who has an income tax has a foreign tax credit to avoid double taxation. And he could almost certainly claim his 30% and get a tax credit. Since, however, he doesn't owe any Canadian tax, can't do that.
Well, he can, but it's zero.
Yeah.
I see. So the U.S. charges tax on gambling winnings to some foreigners, but not others.
Correct. Some foreign countries do not have tax treaties that prevent gambling withholding. Canada, the U.S.-Canada tax treaty specifically states that 30% will be withheld, but Canadians can file a Form 1040-NR, as a non-resident, and get some of their withholding back based on their gambling losses. So, for example, if Mr. Banger had entered $1.25 million of poker tournaments, he would get it all back. Most likely, he is a well-known tournament poker player. He probably has some U.S. losses. He will probably get some of this back. I should also point out many people are backed. Many poker players, when they enter the main event of the World Series, which is a $10,000 buy-in, want to reduce their variance. So they will sell pieces of their entry. Maybe sell 5% to me, 5% to each of you. And they would, of course, not be subject to taxation on money they don't win. The problem is the withholding still attributes to them. And there is no way the IRS does not care about that on the withholding. So for someone who, for example, is a Canadian and is backed by an American, that 30% is lost, period. Part of the issue...
He can't 1099 the other investors and...
Sure he can. But as far as the IRS is concerned, because, and this has been an issue ongoing, I'm staring out a window looking at the Rio Casino right now. And the Rio will not issue multiple W-2Gs, or for foreigners, Form 1042Ss to winners. So if you're backed in an event at the World Series of Poker, you have to issue 1099s. The IRS basically looks at who got the W-2G or 1042S. That's where the withholding to the IRS occurs. 30% is withheld off the top, period.
So if you're an American, it's fairly easy to do these 1099s and make those deductions for the investors. But if you're a foreigner without a tax treaty, you're screwed there.
Yes.
Wow.
Well, even for Americans, there was 10 years ago, Jamie Gold won the whole thing for that year. It was like $12 million. And he had backers, and he was slow in paying the backers. And according to Jamie, he was making sure the tax situation was done first, and he thought the payout should be done after taxes, and the other people thought it should be just pay me half and I'll take care of my own taxes. And that got to be a rigmarole, and Jamie did not come out looking good. But so it's not always that easy to do this.
If you have agreements up front, and in at least two of these individuals' cases, I'm pretty sure there's some backing involved based on scuttlebutt in poker websites. Most people who are professionals do the backing right. They get agreements and they, tell up front, I'm backed by Richard and he owns 20% of me, and they do the 1099s. There's really no issues. Key is, you've got to get paperwork. You have to collect from the person who is the backee has to submit, the W-9s. You need that paperwork so that the 1099s can be issued. But generally, it's not a big deal. Most people these days who are on the up and up do it right.
All right, so we're up and up to number 7.
So that was number 7. Griffin finished in 7th. Sixth place was the biggest winner, Kenny Halyard of Belgium. U.S. and Belgium have a tax treaty, so no withholding. Belgium does not tax gambling winnings of amateur players. Mr. Halyard is a tournament director, not a professional poker player. He owes no income tax on his winnings. He gets to keep all $1,464,000 that he won.
He's the biggest winner percentage-wise. But
He-
there's other bigger winners.
There's other bigger winners, but he actually, based on his after-tax prize, finished in 5th place rather than 6th place.
Uh-huh.
Okay, and, taxes matter. In 5th place, and I apologize in advance, is Wojtek Ruzicka of Prague, Czech Republic. U.S. and the Czech Republic have a tax treaty, so no withholding. The Czech Republic taxes gambling winnings at a flat 15%. So he will owe tax of about $290,000 on $1,935,000 of winnings. He also did very well. Even though he finished in 5th place, he ended up in 4th place based on after tax.
All right, good. 4th place is easier to pronounce.
Yes, Michael Ruan, who lives in New Jersey, which is not a low-tax state, unfortunately. He ended up in 6th place based on after-tax because he owes federal income tax, self-employment tax, he's a professional poker player, and New Jersey tax. He's going to lose just under 46% of his winnings. He won $2,576,000. He's going to lose $1,178,000 to taxes.
Wow.
3rd place was Cliff Josephy from Syosset, New York, where I grew up for a year and a half on Long Island. And again, New York is not a low-tax state. He won $3,453,000. He's going to lose 48.5% to various taxes.
So is that the worst of the list?
No.
Oh.
We have the worst is next. He owes about $1,675,000 to tax. 2nd place is the worst. Gordon Veo of San Francisco. He earned $4,661,000, but he lives in California. California is the highest tax state in the country. They have a 13.3% marginal tax rate if you earn more than $1 million. Mr. Veo has also been very successful this year. He won another poker tournament in Pennsylvania earlier this year. So I'm estimating he's going to owe just under 51.5% of his winnings. He won $4,661,000. I think he's going to owe about $2,399,000 to federal income tax, federal self-employment tax, and California income tax.
And there could well be a San Francisco city tax or something, or
There isn't.
Okay.
There are no city income taxes in California, thankfully.
okay.
The winner, Qui Win of Las Vegas, he won just over $8,005,000. Nevada is a great state. We don't have state income tax here. He's going to lose about 41.5%, or about $3,323,000 to income tax. It's actually the 2nd lowest tax hit of any of the Americans. And that's because he lives in a state with no state income tax.
I thought the top was 38, so it's 41?
Well, he owes remember, he's going to owe 39.6% that's the top bracket, is 39.6, plus self-employment tax, because he's a professional.
Oh, okay.
So he owes self-employment tax in 2016 is 15.3% on the first $118,500, 2.9% thereafter.
So, okay. So now, number 2, the guy who lives in California, he knows he's in the November 9. So can he pick up the next day, sell his house in California if he has one, move to Nevada, register to vote, register his car, get his driver's license changed, become a Nevada resident, and save that California tax?
On the first $1 million, no, because Caesars, or the Rio, paid that out back in July. When you made the November 9, They give you a W-2G or 1042-S if you're not an American, and they pay out the first million, ninth place money. So everyone got that in July.
Could you ask for that to be delayed?
You won it while you were a California resident. Clearly, California income tax is owed if you were a California resident at that time. I would have a 0% chance of winning that argument at audit. Okay, because you were in California. You live there. I mean, it's not going to work.
All right. So that was August 1st, basically. What about between August 1st and November 1st?
There we get into a maybe. And here the issue is, depends on the state. You have to realize that some states believe fairly strongly, and California is one, that if you have any tie to the state, anything you do is subject to California tax. California is probably the worst tax environment in the country, and it's certainly the worst as far as residency audits. So first, you would really need to move. You really, move to Nevada, buy a home, rent, register to vote, register your cars here, have all the addresses changed on your mail, and really live here for many months. You can't do it, especially on someone who might earn, $3 million additional dollars. You have to do it right. Second issue is it's not guaranteed to work even then. California could try to say, hey, you entered this poker tournament while you were a California resident. All the winnings are subject to California tax. California has gone after, for example, writers who write a book and then move. Hey, the book was written while you were a California resident. All your residual income is subject to California tax.
Wow.
Okay? And there's an argument that they're correct in that. I am not saying that. It is definitely something that you could win on, but you might lose on. The other issue is, for example, this situation. Let me give you another California example. California is going after a Kansas business that has a 0.02% interest. That's not 2%, 0.02% interest in another partnership that has some California investments. It's a case called Swart Enterprises. California has lost so far at the district court level and the appellate court level, but this case is going to be heard by the California Supreme Court early next year. So whether a company with that kind of interest has no active investments in California, no active operations in California, it is a California business that invested in some sort of partnership that has some interest in California. That gives you an idea of California and what they will do as far as taxes.
I'm going to ask a related question, although since I'm admitting to it on the air, I'm going to keep it low. I last weekend was in Indio, California for a square dancing convention. And after we got home on one of the nights, I wrote an article for a publication, and I'm going to get $50 for that. Now, I definitely live in Las Vegas. I have no connection to California, but I did write an article for which I'm going to be paid $50 while I was in a motel room in California. Now, they're not going to go after that, but could they if it was a chapter of a book that I was going to make millions on? Should I change my name to John Grisham or something?
Well, they could go after you, but realistically, one of the things that California looks at is, they look at paperwork, 1099s. For example, let's assume today you were to get a 1099 for writing a book, and it's from Acme Publishing of Indio, California. Now, mind you, California could come after you on that. More likely than not, they wouldn't. You would write back, I happen to be writing for a California publisher, but the book was written while I am a Nevada resident. You clearly are a Nevada resident, but it would not be out of the question for California to send you a notice. California, for example, has gone after people basically with the same name as somebody where California owes tax. San Joaquin County, which is Stockton area,
Central California.
Central California, went after somebody who has the same name as somebody who owed them money. This was for property tax. This person lived in Georgia. Okay, he's never been to Stockton or San Joaquin County.
But it was Central Georgia, so there's a connection there.
Yeah.
But again, it's California. If, I wouldn't want to admit things about California. And mind you, the Franchise Tax Board has some very good people. They're just very, very aggressive, and you need to be aware of it. If you're going to move. Do it right. I have clients in California who are contemplating moving, and you also have to realize that if you have, let's assume you really do move. If you go back to California or have California source income during the rest of that year, you will still owe California tax on it. You file a part-year California return, any California source income for the entire year, you owe California tax on. And that is very subtle law.
So we have like 6 or 7 weeks left of this year. What can we do now, before the end of the year, to minimize our taxes? What should we be thinking about? What can we do to help our situation?
Probably he's not going to say move to California.
Right.
Move to its state with no income tax.
Well,
Nevada
it's a little late
welcomes
for
you.
that, right?
Well, the rest of the year's income would be not subject to that state's income tax. If you were to move today to Las Vegas and you were a California resident and you have no more California source income for the rest of the year, you will not owe California state income tax on that income for the rest of the year.
So there isn't this 6 months and a day deciding whether you're in or you're out, and that doesn't matter.
It does matter, but I'm assuming you would move. If you move, let's say you really do move on December 1st from Los Angeles to Las Vegas, and you stay here for not only December of 2016, but all of 2017. You've clearly moved, and you would file a part-year California tax return because you became a Nevada resident in December of 2016.
I see. Okay.
Other things, and the first thing I do need to point out is you need to talk to your own tax advisor about these because although I'm going to mention various things, everyone's tax situation is unique and what is right for one person may not be right for another person. So with that said, harvesting capital losses. Everyone's allowed to take capital losses in excess of capital gains of $3,000 per year if you're single or married filing jointly. So something to look at is whether you want to sell some dogs of stocks. Do be aware of the wash sale rule. If you purchase the same or equivalent stock in another brokerage account within 30 days of the sale of the stock, including a retirement account, you cannot take the loss. Your business or you...
Before you go on that, if let's say it's a S&P index fund, which this year didn't go down, but had it gone down and we had it handled by Fidelity, and we took it out of there and got essentially the same one, but this is handled by Schwab. Are those considered different enough, or are those considered the same thing?
They're considered the same thing. That would be a wash sale.
Okay, because they're both S&P index funds.
If you buy the same S&P index fund offered by, you buy sell the Fidelity S&P index fund and buy the Schwab S&P index fund into the same index, it's essentially the same exact investment.
Okay.
And that would absolutely be covered by wash sale.
But if it was a foreign fund where Fidelity's foreign stocks that they have bought would be different than the foreign stocks that Schwab has bought, but they're both foreign funds, would that be the same?
No, that wouldn't be the same because the investment itself is different. You're buying basket A versus basket B of funds or stocks, and so that's different. But if you're buying the same stocks, even if it's if it's the Russ Fox China Fund and you buy the Fidelity China Fund, they happen to invest in the exact same stocks.
Not likely.
I know it's not likely, but that would be a wash sale also. It's very unlikely in that situation.
But you could go from an S&P fund to a Russell 5000 fund.
Absolutely.
Or you could sell gold mining stocks, but buy gold itself, right? They're correlated. They're not, but they're two different things.
Absolutely. It's the same investment, or essentially the same investment. Gold and gold mining companies are not the same investment.
Right.
Equipment purchases. If you buy equipment and put it into service, I want to make sure you're aware of that. You have to start using it. This year, you can deduct it. And
can you still return it if it's slightly used?
Well, that depends. But this is really for businesses. There are some ways of what are called Section 179 depreciation, which allows you to have pretty large write-offs of equipment, and what is called bonus depreciation. Both of those are good things, and remember, you have to put it into use. If you've had a good year as a gambler and are planning to travel next year for business, buy your tickets this year. Almost everyone's a cash basis taxpayer. So when you buy an airline ticket and it's a business expense, it's deductible when you buy it, not when you use it.
Mm-hmm.
That's a good one. I hadn't thought of that one.
Okay. Now, if you make, let's say, a future sports bet, you're going to bet on the NBA championship this year. So you bet $1,000 that the Sacramento Kings are going to win the NBA championship. By the way, you just lost $1,000, but
you really good odds.
If you are getting really good odds, you can't take that loss yet because the NBA season is not over. On a futures bet, you have to wait till the event happens. The event hasn't happened. It won't happen until June or July of next year, so you cannot take that gambling loss yet. Charitable donations. If you make charitable donations, this includes a charitable donation you charge on your credit card on December 31st. You can take that donation this year. There are substantiation requirements. For any donation in excess of $250, the organization must provide a contemporaneous written acknowledgement of the contribution. To be considered timely, the written acknowledgement must be made no later than the date the donor files the tax return for the year the contribution is made. So if you donate to a fly-by-night but real charity, make sure they send you the piece of paper. It has to be written, must be on paper, cannot be an email. It's $250 or more. Under $250, your credit card statement or your canceled check is considered sufficient documentation. Those are really the main things that are left for this year. Unfortunately, you have to spend money to have deductions. So some of this is spending of money.
And, on this general subject for video poker players, many of us earn points, which are convertible to free play, which should be taxable when you withdraw it. If you're having a winning year, you let that build up, and you do not take it. If you're having a losing year, you clean out all your accounts.
That absolutely, because obviously, if you're losing money and you've got, say, $25,000 of free play, and it's not going to be taxed, I think that's a good idea to maybe use it this year rather than waiting till next year when I'm in the 33% tax bracket. So I agree completely.
All right. Caesar's Palace, Caesar's Entertainment. Since your last visit, there's been some news in the Caesar's bankruptcy situation. Bring us up to date on this, please.
Well, I think as everyone remembered, the junior creditors of Caesar's were alleging that Caesar's management was trying to create a good Caesar's and a bad Caesar's. And court rulings basically implied junior creditors were right. So Caesars offered a much, much sweetened bankruptcy settlement to all the creditors, especially the junior creditors, and they have now all agreed to it. So in January in Chicago, there will be a trial, because in bankruptcy to settle, you have to have the trial, but it will be probably a relatively quick trial, where Judge Golgar, who is the judge handling the Caesars bankruptcy, has the right to approve or reject the settlement based on what a court administrator will review, his review of it. It is extremely likely that sometime in 2017, Caesars will emerge from bankruptcy. The current owners, the hedge funds that own it, will not own very much of it in the future. The creditors will end up owning it. Caesars' current stock is not trading very high because it is, not worth very much because it's going to be diluted based on bankruptcy settlement.
So if you took a bath on Caesar stock, you sell it before the end of the year to offset your gains. And
it's one possibility.
And players are likely going to get, like a lot of us, really reduced what Caesars owed us, whatever we had in terms of total rewards credits that we could transfer into free play at some discount. Last few years, a lot of us emptied our accounts, whether we had winning years or losing years, because there was some concern that we might not get it.
I don't see any issue with that. It's Caesars really wants to keep the goodwill of its players, so there's been no mention in any of the possible agreements of diluting the Caesars total reward system at all. So I'm expecting that to continue forward, and whatever points you have, the new Caesars entity will continue with.
The last time you were on the air, you suggested using the email address rcfox@claytontax.com. Is that still the best address?
That is still my email address.
All right. Now, your name is Fox, and you own a company called Clayton Tax. Now, is there Mr. Clayton?
Nope, never met the guy.
Never met the guy. So how on earth did you get the name Clayton Tax?
Well, when I formed my business back in 1999, and this was back in California, every corporation, and I was a corporation back in California, has to have a unique name. And when I tried to get various combinations of Fox, I couldn't. There's this small company in West Los Angeles you might have heard of, 20th Century Fox. It was at the time, or now 21st Century Fox, Fox News, Fox Everything. Well, they've taken any name you can think of with Fox in it.
Probably not Russ Fox.
No, but I didn't like that name. So I chose, plus this way I can blame Mr. Clayton for any mistakes I make. So I chose the name Clayton Financial and Tax, or really when I formed the business it was Clayton Services, now Clayton Financial and Tax. We're an LLC here in Nevada.
And
Fox News and Tax might have gotten you more business, but
I suspect I might have gotten a nice letter from a lawyer or two or three saying that's not a particularly good idea.
But your CEO has not been fired for sexual harassment purposes, has he?
As far as I know, no.
Very good. All right. We've been talking to Russell Fox. This is a lot of fun.
There is one other topic I would like to bring up, which is changes for 2016 returns from 2015, because there are several, and these will impact people. First relates to 1099s and W-2 filing. The deadline on that has changed. Used to be, you still have to send them by January 31st. Used to be you filed the paper ones by February 28th, electronic March 31st. These are now due January 31st, W-2s and 1099s for what is called non-employee compensation. For example, if I hired you as an independent contractor, this does affect some gamblers who, for example, hire people to perhaps stake out an Advantage machine. That is non-employee compensation. 1099 should be issued. Those 1099s need to be both sent to the individual and filed with the IRS by January 31st of next year. That is a change from this current year.
Oh, on that topic, it seems like I never get K1s on time, right? You're supposed to get a K1, and it just seems like, well, last year I got it 2 weeks after I filed my tax return, and so I had to do an amended return because I had forgot this one was coming. But, I mean, do they care? Because same thing with 1099s. Those are often late, too.
1099s have been late, and the IRS has said, we'll see, that they are going to strictly enforce this new deadline. We shall see. In the first year, I expect so many people to make errors and file late. I doubt they're going to be as strict as they say, but they could be. Computers are pretty easy to issue penalties. As far as the K1s, let me get to that in a minute about K1 deadlines.
Before you get to the K1 deadlines, on 1099s, a lot of us have won casino drawings of high enough level that we get 1099s. We physically, what do we do with, so let's say we have $10,000 in casino drawings from however many casinos it took to get to that number. We're not going to file our return until April 15th. What do we need to do by January 31st? Or is it just we need to receive them by January 31st?
It's actually a postmark date. 1099s generally have to be mailed. They have to be in the mail on or before January 31st. So let's say
from the casinos to us.
Correct.
Not from us to the IRS. Not
no.
Yeah,
This is
not
okay.
the guy receiving it.
no.
Okay.
It could. I mean, if it takes 2 weeks to get from Las Vegas to Las Vegas, that's unfortunately bad luck with the post office. Where this impacts is, for example, let's say the Orleans Casino issues you a 1099. You won a jackpot for $2,000.
that would be W2G.
But
But I could win a drawing. Okay.
For $2,000. They send you that 1099. Mail it on January 29th, completely legit. They have to file it with the IRS by January 31st if it was for compensation. Now, 1099s for drawings are what is considered other income. Those will continue to have the current deadlines of February 28th if filed by paper, March 31st if filed electronically. It's only W-2s, which is wages, and 1099s for non-employee compensation that have the deadline of January 31st for filing with the IRS or Social Security.
All right. I'm still a little bit fuzzy on that. Let's, another contrary to fact, assume I won but this is just to the receiver of it. The receiver doesn't have to do anything with it until April 15th.
Correct. When you file your tax return, hopefully you'll give it to your tax professional before April 15th. But, you have to take all of your 1099s, W-2s, W-2Gs, K-1s, use them to prepare your tax return. But you don't have to do anything with that. It just goes with your tax return.
All right. If I won this poker tournament that I didn't enter, and Richard was my 50% backer, so I'm going to 1099 him with the money that I give him. And if I'm 2 weeks late, as long as he doesn't say anything, there's no problem. Is that correct?
No, there's a problem.
Okay, good.
Because
That Richard's causing me another trouble.
Well, and the IRS. You have to send the filing to the IRS by January 31st.
actually, on this one, you'd have till February or March because this is for other income. It's
Okay.
only non-employee compensation, which is independent contractors. You're hiring somebody not as an employee, but as a contractor.
So the guy who cleans your yard.
Potentially, yes. Although there are also exceptions to people who need 1099s. I do a continuing education seminar for tax professionals on this, and it takes 6 hours.
Jesus.
Okay, on all the aspects of 1099s. It's complex. Basically, you need to send your 1099s to the recipients by January 31st, period. That's all 1099s. The filing dates are January 31st if for non-employee compensation, or the current filing dates of February 28th, paper, March 31st, electronic for anything else on a 1099.
Very good.
Okay. Other changes. Partnership tax returns. These include LLCs that file as partnerships. Will be due March 15th rather than April 15th. A 6-month extension is available to September 15th. K-1s that are generated by this, and this is something you asked, have to be, sent to the recipients when you file your tax return with the IRS on or before that date. That means you may not get it until, late September.
Wow. So what do I do then in preparing my taxes? Do I just have to get an extension until they send me the K-1?
You have to get an extension until you get that K-1.
Wow.
You are at the mercy. And for example, my mother this year was unaware that she was getting a K-1 which had a significant income. And we were surprised because we asked and said, no, breaking even, which is it made $100, lost $100 every year. This year it made $20,000. Oops. Well, my mother had to pay some tax penalties because we had no knowledge of this.
Did she disown her son?
Well, I didn't make this investment. So she was not happy about it, but unfortunately, you're at the mercy at times.
But you were the messenger.
But even if she had filed an extension, she would have still owed penalties, right? Because she
did
owed
file
tax she didn't know.
Yeah.
Oh.
And there isn't a way out. And she filed an extension. Now, on the federal side, there is something called first-time abatement, where you can ask the IRS and get their blessing for penalties to be abated. Most states do not offer that. California, where my mother resides, definitely does not offer that. Hey, calendar S corporations will still be due March 15th, 6-month extension to September 15th. Calendar year C corporations will be due April 15th instead of March 15th. An extension available to September 15th. Difference there is calendar year C corporations pay tax. S corporations generally do not pay tax. They're a flow-through entity. Trust and estate tax returns are due April 15th. They can get an extension. In the past, it's been 5 months till September 15th. Beginning next year, it's 5.5 months to September 30th.
Uh-huh.
Okay, and so that means that's another K-1 that you might not get. If you happen to be, the beneficiary of a trust. FBARs, foreign bank accounts. The FBAR has been due June 30th with no extensions. It will now be due in April, probably concurrently with the tax returns, but we're not certain. FinCEN, the agency that handles this, has not come out with final regulations. So we do not know if they will be due April 15th or April 17th. We do not know if there will be an automatic extension or if you have to file a different extension with FinCEN. We do not know if people who reside outside the U.S. will get a 2-month automatic extension to June 15th, as they do for their tax returns. So the FBAR is in flux, except we know it will be an April something deadline, but we don't know when.
Actually, here's a question that may apply to some of our listeners. You know what NetTeller or Skrill is?
Very well.
Okay. Do they count as foreign bank accounts?
Yes, these are clearly foreign financial accounts.
Okay.
They offer services, they offer credit cards. That sounds like a bank or financial institution to me. Additionally,
what about PayPal?
PayPal is a U.S.-based company. They're not foreign.
Okay.
Most of the online gambling sites that are outside the U.S., you probably need to file an FBAR for.
Oh, just if the money's sitting in an account.
If, for example, let's say you have $25,000 and a poker site outside the U.S., the FinCEN has been trying to come up with new arguments, and one argument they made is that these are online casinos, and an FBAR needs to be filed. Our recommendation to our clients is, when in doubt, you file the FBAR. It's a piece of paper. There's no tax. It's much better to file and have filed when you didn't need to than not filed and owe a penalty.
Huh. So yeah, so if you, but aren't you admitting to a crime if you have money in an online sports book?
My understanding, and I am not an attorney, so okay, is that it is illegal for these online sports books to offer you to play on the sites, but it is not illegal for you to play unless you live in Washington State or a few other states that have made it a felony to play online on one of these sports books. Additionally, for example, let's assume that you have a online sportsbook account. What is to say that you haven't traveled overseas and that's where you set it up and you only use it when you're overseas? That's probably legal. I'm not a lawyer, but I would guess that's legal. And you would still need to file the FBAR.
Okay. So, yeah, certainly poker players do that, travel and play online poker.
Lots of them. And
Yeah.
I think there are sportsbook bettors who do that too.
Some travel all the way to North Las Vegas before they do that. All right, we've been talking to Russell Fox on taxes. Thank you very much. This is your third visit. If you like this, and I think you probably did, he's been here twice before. So go back and look at the old interviews as well. They are lots of useful information in there. Let's talk briefly about our sponsors. South Point has more than 10,000 games, returning more than 99%. That's more than anybody else has. In November, the promotion of the month is earning Smith's gift cards at half price. Normally, 83.34 points gives you a $25 in cash or free play. Now that same number of points earned and redeemed in November gives you a $50 Smith's gift card. Limit of 10 gift cards for the month. Next week, Thanksgiving, double points, midnight to midnight. All machines eligible on double points for video poker, bigger multiplier for slots. No limits. At videopoker.com is the best place to practice lots of different games. The game of the week is 100 Play Super Times Pay. Super Times Pay is a 6 coins per line game where periodically, approximately once every 15 hands, you receive a multiplier before you play. Multipliers range between 2x and 10x, and your scores are so if you hit a royal on a 10x multiplier, it's 40,000 coins instead of a measly 4,000. There's no change in strategy. Super Times Pay in general adds about 0.25% for the returns. Very interesting show. Thank you, Russell Fox. Thank you, Richard. Go out and hit lots of royal flushes, everybody. Good day.